Welcome to Shet Vidya Mandir online lessons. Ganesh and Karthik are partners sharing profits and losses equally. They decide to dissolve the firm on 31st March 2018. The balance sheet is given to us. See on the liabilities side, creditors, bills payable. Where will this go? Realization account, credit side. And on the debit side, building, furniture, debtor, stock, bills receivable. All assets will go on the realization account, debit side. Cash, where will cash go? Cash account, debit side. Capital account and reserve fund will go to the partner's capital account. Capital account will be written as by balance brought down, and reserve fund will be distributed among them equally since their profit sharing ratio is equal. Assets were realized under, so cash bank account debit to realization account. Building, debtors, stock, bills receivable, you'll add all these figures. Ganesh agreed to take over furniture. So in realization account, you will write Ganesh capital account on the credit side by Ganesh capital. And the second effect, Ganesh capital account debit side to realization, the value of furniture 10,000. Realization expenses amounted to 2,000. So realization account debit to cash account, that is 2,000. Show realization account, partners capital account and cash account. Okay, so draw these accounts and let's get started. See, this is my particulars, rupees realization account. Again here two amount columns on debit side and credit side. This is my partner's capital account, Ganesh and Karthik, debit credit, and this is my cash account. Okay, these three accounts are required to be prepared. So let's start the sum. Always start with the balance sheet first. So all the assets I write on the debit side, two assets. You can write sundry assets or you can write assets. Now write all the assets. First is building. In the inner column I'll write down 88,000. Then I have furniture. Furniture is 12,000. Debtors. What is the amount of debtors? 32,000. Stock 24,000. And bills receivable is given as 4,000. So the total of all these figures will go outside 1,60,000. So first we are just posting all the balance sheet items. Next is the outside liabilities. Right here by liabilities. So liabilities are creditors. Creditors is given to you as 18,400. And then is bills payable. That is given to you as 5,600. So outer column take the total 24,000. Alright. Next is debtors is done. All the assets are done, all the liabilities are done. Now take cash. Cash right here. To balance brought down. What is the amount of cash in the balance sheet? 4,000. So I write here 4,000. Now we have capital account. So write here by balance brought down 40,000. Ganesh is 40,000 and Karthik is 80,000. And then reserve fund, since the profit sharing ratio is equal, we write equally distribute it among them. So reserve fund is given as 20,000. So distribute it as at 10,000 and 10,000 equal. Our balance sheet is done. Now we'll go to the adjustments. There will be two effects for the adjustments. Assets were realized as under. So right here by cash bank. Okay, now we have opened cash account. I'll write here cash account. If it is given bank in the sum, you write that. Building 82,000. Debtors 22,000. Stock 20,000. Bills receivable 3,200. So take the total outside, that is 1,27,200. The second effect immediately, cash account. On the debit side, since you are receiving cash, so write here to realization account. Now you don't need to write all those assets again. To realization account, right here in bracket assets. So 1,27,200. So our realization of assets is done. Ganesh is agreed to take over furniture for 10,000. So here you will write by Ganesh. In bracket write down furniture. You can write furniture taken over. So he is taking it over for 10,000. So write here 10,000. And take second effect immediately. Ganesh account debit side to realization bracket furniture 10,000. What else is given to us? Realization expenses are 2,000. So here you will write to cash. Realization expenses is 2,000. Now another thing, these outside liabilities, creditors and bills payable, they are not telling us that they have repaid. In absence of any such information, we are assuming that it is paid at this value. Okay. So you have to write here after realization expenses, write down creditors 18,400 and bills payable is 5,600. We are paying it off. So 26,000. Take the second effect in cash account by realization liabilities. What was the amount? 26,000. Now all the entries are done. First we will balance our realization account, find out profit or loss on realization. So let's find out. This side total is 1,86,000 and here you have to minus this 1,86,000 minus these three. So you write by partners capital. Partners capital, there are two partners, Ganesh and Karthik. What is the amount of loss? 24,800. So distribute equally 12,400 and 12,400. Total 1,86,000. Alright. Now this loss on realization, take it to partners capital. Credit side there, so here it will be debit side to realization account. Right here loss on realization. Suppose it was profit on realization, it would come here by realization account. Since it is loss, it will come here. 12,400, 12,400. Now we have to balance the partners capital account. Here this is 50,000 and this is 90,000. Now whatever is the balancing figure, you will take it to cash. Okay. So here it is 27,600 and here it is 77,600. This is same 50,000 and 90,000. So this is the balancing figure. Where we will take this? Cash account, and our cash account should tally. So write here by, what is the name? Ganesh. By Ganesh capital account 27,600. By Karthik capital account is how much? 77,600. Now let's find the total. 1,31,200 and this is also 1,31,200. So this is the amount paid to Ganesh and Karthik. Ganesh is paid 27,600 and Karthik is paid 77,600 in dissolution of the firm. Okay, and the loss on realization and reserve fund are equally distributed because the profit sharing ratio is 1:1. That's all. The sum is done. See you again. Thank you. Sailesh and Shashank were partners sharing profits and losses in the ratio of 3:2. Their balance sheet is given to us. Capital account and current account both are given in the balance sheet. Creditors, bills payable, they are the outside liabilities, and all the assets, building, plant, debtor, stock, bank. Bank, where it will go? Bank account. The other assets will go to realization account, debit side, and creditors and bills payable will go to realization account, credit side. The firm was dissolved on the above date and the assets realized as under. So cash bank account debit to realization account, plant, building, stock, debtors. You have to add all. Sailesh agreed to pay off bills payable. Okay, he is paying off a liability. So realization account and Sailesh current account. Then you have creditors were paid in full. Dissolution expenses were 1,400. Now we have to prepare 4 accounts: realization account, partners current account, partners capital account, and bank account. So let's get started. This is my realization account. This is the bank account, partners current account, and partners capital account. Okay. So let's start with the balance sheet first. All the assets I will write here. 2 assets. Assets from the balance sheet, they were transferred to realization account at their book value. So write here building. What is building? 7,000. Then you have plant. What is the value of plant? 9,000. Debtors is 14,000 and stock is 5,000. Total in the outer column 35,000. Let's go to bank then. To balance brought down is 6,000. Now let's go to the liabilities side, capital account and current account. By balance brought down, in current account, let us see 3,000 and 2,000. And capital account by balance brought down is how much? 10,000 and 6,000. Okay. After that, creditors and bills payable, liabilities we write here. By liabilities, we have creditors and bills payable. So creditors is 17,400 and bills payable is 2,600. So the total is 20,000. So our balance sheet is done, and now the firm was dissolved on the above date and assets were realized as under. Now whatever comes below in this, it's like adjustments, 2 effects. Okay, remember that. Now assets realized as under, plant, building, stock, debtors, they have given us values. So what is the journal entry? Bank account debit to realization account. So I will write it here. By bank account, and write all the amounts individually. Plant, it's given as 8,000. Building is 6,000. Stock is 4,000. And debtors is given to us as 12,000. So find out the total, how much we have received? 30,000. Now second effect, take in cash bank account to realization account. Right here, assets realized, or just assets also if you write, you will know. And then Sailesh agreed to pay off the bills payable. Come to realization account, see liabilities are here. When we pay off the liabilities, we write to bank and the liability here. But now Shashank is taking it over, so write here to Shashank capital. to Shashank Capital. No, current account, sorry, we've got current account here, so I will put it in current account. Suppose there was no current account, I would take it to the capital account. All the adjustments now have to be done in the current account. 2600, right here bills payable. Okay. Now second effect, take to Shashank's current account. Right here by bills payable, debit side in current account, debit side in realization account and credit side in current account. Bills payable is 2600. Now creditors were paid in full, so right here to bank account, payment of creditors, full amount, so 17,400. Second effect, take here, bank account by realization account, creditors 17,400. Next is dissolution expenses were 1,400. To bank, we can even combine these two. Dissolution expenses 1,400. Okay, second effect, by realization 1,400. Now all my entries are done. Now I require to balance my realization account first. So find the total. Total of debit side is more. It is 56,400. So what is the profit or loss on realization? It is loss of realization, which will be transferred to partners capital current account by partners current account. If current account was not there, directly in capital account. So write down Sailesh and Shashank. What is their profit sharing ratio? 3:2. So what is the loss on realization? 6,400. That has to be distributed in the ratio of 3:2. So 3,840 and 2,560. So take the second effect, partners current account, credit side there, so debit side here now. To realization, in bracket write down loss 3,840 and 2,560. Now first we will balance the current account and then take the balances to the capital account. So find out what is the balance. Here it is 5,600 and here it is 2,000. And here, now here it is 2,560. So you have to write here by capital account. How much? 2,560 minus 2,000. So 560. Okay. And the other person, this is 5,600 and here it is 3,840. So balancing figure will come this side. To partner capital account is 1,760 and here you will write 5,600. Okay. Now these balances have to be got to partners capital account. The debit here will come to the credit here and the credit here will come to the debit here. So here write down by current account. Now what is this partner? Sailesh. So write here 1,760 and here to current account. This is Shashank 560. So Shashank is 560. Okay, now let's find the balancing figure. Here it is 6,000 and here it is 11,760. Here it is 11,760 and here it is 6,000. So cash bank to bank account, dissolution of firm. So you are settling the accounts to bank account 11,760 and here it is 5,440. This is your balancing figure which you will take to bank account. Credit side here, so debit side there. Sorry, debit side here, so credit side here. By Sailesh capital account 11,760 by Shashank capital account 5440. So let's find out the total of bank account. It is, we have not written this amount, this was 30,000. So 6 plus 30,000, that is 36,000. And here find out, this is also 36,000. Okay, do this sum again. The more you practice, the better you get. Thank you.